Hello, Jim here. Today I've got three trades that I made recently that I want to share with you. Each of them were very profitable, made some really good income. I'll talk about the companies themselves, why I think they're fairly valued, very good fundamental companies. And then I'll go into a little bit of detail about the trades themselves. And then finally, we'll look, can you still make a good trade on each of these companies? So stay tuned. I think it's going to be well worth your while. Okay, now the first company I wanted to talk about is Uber. I actually made a trade on them and was able to close it way early. Now you can see they're definitely near their 52-week, the high end of their 52-week range. Currently at 94.07. It looks like after hours they're 94.40. Their PE is 32, but they have such good growth. I don't necessarily look at them as being overpriced. If you look at their profitability, A plus, 72.26 return on common equity, return on total capital, 9.23, return on total assets, 22. Very good numbers. Cash from operations way up there, 8.79 billion, which is really, really high. Net income per employee, almost $400,000. So, I mean, just a very well-run company. Growth is looks like they're growing 18 to 20% revenue. Earnings are growing substantially too, over, here it's showing EBITDA growth almost 86%. So I do think that they should have a higher PE because of this. Now, valuation, it's showing is a C, and this is non-GAAP, not crazy, 13.53. If we look at their capital structure, not 196 billion is their market cap, total debt 12 billion, but they have 7 billion in cash. So debt, I'm not too worried about. I do like to see what earnings looks like. So they had earnings on 8.6. They beat earnings. We can look at earnings estimates. So 2025, 291, 26, 355, almost 20% increase. 27, 444, 510 for 28, then 608 for 29. Then by 2030, making over $8 a share. So substantial growth, almost 2.5 times earnings growth. I also like to look at financials. I like to see, you can see they're steadily increasing. They've actually slowed down with their increase in income, but still looking very good. Every year it looks like they're up some. If we look at their balance sheet, let's see if they're buying back shares. And here's the supplemental items, total shares outstanding. So it looks like from 24 to 25, they bought back a little bit. They went from 2 million and 89, or that may be 2 billion shares, the 2.085, or 2,085. I think these are in hundreds of thousands. So, and in the previous year, they had increased. So they just recently look like set up a share buyback program. So fundamentally, everything I like to look at, if I come over, let's move this down. If I come over and I look at Uber, so I closed two vertical put credit spreads, 85.75, so a little bit lower than their current price. If we come back over to summary, so more, in this range right here, 85 would be right about, probably back over here, right around here. And then was able to close it 22.83. So it was about a 85-90% profitable. The return overall was 226%. And I made $210.49. So this is what I share with my membership. I will make a trade. I will post it. I'll share an image of the trade itself, what it looked like, what was open, what was closed. And then, you can search. This is currently in my Patreon. So members, if they wanted to see all the different trades, they could come down and they could look. So here's the original trade. Had 130% return, 85.75, 233 is what I brought in originally. So the fact that I was able to close it, I literally opened it on September 17th and I closed it on October 6th, which was several weeks before it was due to close. So October 6th, it was supposed to close on 10/24. And that's what I found has really made my returns much, much better. And the amount of premium I can bring in is closing these positions early. So can we potentially do another trade? This is Schwab. This is the old network. I still like to use the old network. It's also easier to show what the trade would look like. So here I'm selling to open one contract. I'm buying to open one contract. It's currently 94, so 93 is too high. Let's see if we can get almost the same thing we had before. So let's go down to 85. Let's do 85.80. So I'm selling in 85 and I'm buying in 80. But we'll want to go out a little bit. I probably would go out to 11.21 if I was looking to open a new trade. So this is telling me sell to open one contract in Uber expiring in 11/21 at 85, and I have a $5 spread. So I sold in 85. I could pick up between 138 and 147. So the difference between the bid and ask looks pretty good. And then I could buy to open in 80. 58 to about 67. So again, not a huge difference between the bid and ask. A lot of times I'll do a $10 spread, so I might look to see what 75. So even more between 115. So the bid is 107, the ask is 122, right in between is 115. I typically will do a 10, but sometimes I'll see, well, what does it look like if I do the next one higher? So what if I do a 77.50? So between 92 and a dollar. Sometimes I like to get at least $1 or $100 per contract, and I usually will do two. So the numbers still look good, and I think if we expand this, we could see, well, it's a 19 delta. Maybe I want to take a little less risk. Let's see what an 84 looks like, a 17 delta. So I can see here's delta. I can see gamma, theta. I can see how many days to expiration, 26. So it provides a lot of information here. Settlement type, multiplier. You could see the different, you can see the range. You can see how many contracts were open, what the volume is. So, and Uber typically has pretty good volume. So I'm taking a little bit less risk. This is pretty close to a 15 delta. Let's see if I went down one more, if that would be a true 15 delta. Yep, that's a true 15 delta. So that's a lot of times what I want to do is right around a 15 delta. And I could probably even go lower here. So I could go look at 75, and I'm between 75 and 83. So I could potentially go a little bit lower, 72.50, 79.89. And this is where I might say, well, I don't really want to have that wide a spread. I could come down to 75, and if I went up to 84, what does that show me? Right, pretty close, 89 to 96 to 102. So I would probably, this is starting off at 101. I would probably do 102. I could bring in 204, expiring in only 25 days. Now, I like to do monthlies. I'm beginning to do the December trade, so I could also look at December. Here again, I could look at the delta. This is too high, so I could go even lower. I could say, well, let's look at 80, and the delta for that is 14, so I want to go a little bit higher than 80, 82.50, and this is 75, so $1.08, so 88 to $1.08 to $1.26. Now I could go a little bit lower since I'm at 82.50. So I could do an 82.50, 72.50. It's currently $94. So that's pretty far outside the current price. It's almost like a 10% discount. So yeah, $9 off of 94 would be right around 87, I guess. So this is this isn't a bad trade, 82.50. Now I might thin the spread a little bit, so I might go to 75 just out of curiosity. So I could go with a thinner spread. I could even look at 77.50. So that's a $5 spread, and I could bring in between 80 and 93. But again, I prefer to bring in a little bit more, so I would probably change that to a 75. So this is probably the trade I would look at currently. If they had earnings coming up real soon, I might wait a little bit after earnings. But you can see here, it's definitely, you can still do a new trade on them. And these are the kind of things I look at. And this is my typical trade. Now, if you can't do spreads, you can remove this, and then you could do it as a cash secured put. And you can actually bring in a little bit more premium, but you would need enough to cover, what is that, 8,250, because every put or every contract's 100 shares. So you would need to handle, or you need to have enough cash to cover 8,250. So this is Uber. This is a trade that's I've done a number of times. That's worked out pretty well. And I plan to do another one probably within another week or two. I might wait till right after earnings, especially if they miss earnings and dive. But let's jump into the next stock. Okay, the second company I wanted to talk about is DocuSign. It's a company I like to trade. It doesn't move that much, and it's currently down. It's pretty near its 52-week low. A couple dollars above it. Its 52-week low is like 66.35, and it's currently right around 71.40. They have pretty good earnings per share, 368. They have pretty good profitability, good profit margins, pretty good return on equity, return on total assets, good but not great. Cash from operations looks good, and then just overall their profitability looks good. Growth is it's a bit slower. They're not the fastest growing company, but kind of like that. They're a little bit easier to trade on. Because of that, their momentum isn't the best, which is okay. Just kind of it's not going to shoot through the roof. Valuation is a C currently. I believe they're a little bit oversold. Their capital structure is pretty impressive. 14 billion market cap, but only 126 million in debt, and over almost a billion in, well, not almost a billion, but 844 million in cash. So on their way to having a billion in cash. They don't pay dividends, earnings. They had good earnings not too long ago, back September 4th. They beat both with earnings and revenue. Let's look at earnings estimates. So they're steadily increasing earnings. They're going from 368 for next year, or the remainder of this year, then 403, then 453, then 465, then by 2030 doing about 513. So steady growth, earnings revisions, 20 up, only one down, 20 revenue revisions up, which is good. Earnings surprises, mostly beats, both with earnings and revenue. So that looks good. Financials. Let's see if what they're doing with shares. So come down here to supplemental. So they've been buying back shares starting back from 24. So they went from 205 down to 202.5 and then 201.1. So they are buying back shares. And you also look at their income statement, and it's steadily increasing. They have every year they've gone up. So they went from 700 to 974. Then they went up above a billion, 1.4 billion, 2.1, 2.5, almost 2.7 and a half or 2.76, then 2.97 billion, then over almost 3.1 billion. So what I like to see that. I like to see steady increases. So everything I like to see here, is it growing gangbusters? No, but it's just a steady, good, healthy company, which I think is selling at a little bit of a premium. Now, if I come over here, here's the latest trade I did with them. This was back on October 1st. I sold 2 vertical put credit spreads on DocuSign with strikes of 65 in 55, expiring 11/21/25, and that was the very beginning of the month. So, and then this again is what I share with my memberships. I talk about why I like the company. I also will mention, you know, if they want to make a similar trade, don't just copy my trade. Maybe you can make it better. It can also be done as a cash secured put. It can also be done in depending on the size of an account, in not so large an account. I mean, if you have even a $10,000 account, but you wouldn't be able to do too many of them unless you could do spreads. Like here, I'm doing a vertical put credit spread, but again, you could do it as a cash secured put. I do mention the delta. I did go with a little bit more, a higher delta because I felt like, the price was right. The next lower strike is at 60 and it was like a 12 delta. So it didn't have as many, looks like it must jump by $5 increments. But here again, I share details about the trade. I also will look at the Bollinger Band. I'll see where it fits on the Bollinger Band. And I did that with DocuSign, and they're towards the bottom of the Bollinger Band. So, and again, I just did this trade. I believe I've rolled them recently again. It's just an easy company to trade, and if you can do it in the 65-55 range, that's a really good range. So here's DocuSign. I mean, if we take a look, I went out to 12.19 because again, my new trades, a lot of them will be 12.19. I do have a lot of expirations in 11.21, but here I'm looking at a 60 and a 50, so even lower, almost $11 below, and significantly below the 52-week low. So could it get that low? It could, but I don't think it will. What will more likely happen is they'll get a bit of a bounce. DocuSign will get back up into the mid to high 70s, and this trade will become very profitable. So I can also look, it's about a 16 delta, and this is 54 days out. By tomorrow, it'll be 53. If I do the trade at the end of the week, it's almost like 50. I also look at earnings with this. So I would come back here, and I try to stay away from earnings. So if I did a new trade on them, I probably, well, here's 12.4. This is the kind of trade that I might go ahead and make, even with earnings coming on 12.4, because I've had so many instances where I can close this early. So I probably wouldn't worry about it. I might say, well, I want to take a little bit more risk, so it does jump by 250. So I might do 62.50, and I might go with a thinner spread. So this is still getting me anywhere from 81 to $1.28 with a 750 spread. So it would be 750 times 100, so $750 would be the required capital with this kind of a spread. Now, I might even say, can I do a $5 spread? So I might look at 57.50, and that it's still not bad. I could always try to get up to this high, but I'm okay with going $7.50 for the spread. Because if you can bring in anything near this $1.28, you're going to get a really good return. Now, I typically will do 2 contracts. This is something else I share with my membership. I say, well, if you have bigger accounts than me, or you really like this company more so than me, well, you could maybe do 3 contracts. If you don't want to take as much risk, you could do 1 contract. I typically do 2. And then I usually go pretty close to this, to the ask, so which is $1.28. So I would come over here, and you could type it in too, but I would take it up pretty close, if not right at the 128. So I'd try to pick up 256. I would fire it off, review the order. If it didn't get filled right away, then I would do it again, and I might lower it. I might go down to 126, try it again, maybe then 124. And usually the second or third time it might go through. So maybe at $1.20 it would go through. But I've had some go through literally the first trade, especially if they have significant volume. Like if we look at volume, open is 12 volume is relatively slow, but now Uber is a great example. Uber could go through the first time because it has such high volume. Something like NVIDIA, AMD, Oracle, any of those kind of companies have such high volume it might go through the first time. So usually for this, I have to refill it a couple of times, but then it'll go through. So DocuSign is still a good opportunity for trade. If I didn't have one open already, I might go ahead and do another one. But I'm probably going to wait. I believe my current DocuSign, if it goes up a couple more dollars, I think I'll be able to close it for like a 70 or 80% profit. So this is the second company. Let's jump into the third one. Okay, the next company is Coherent Corp. I just recently started trading them. Now they were up big time on Friday, and again after hours they're up between Friday and then after hours. It's almost $10. They're almost up $10, which is significant. I do still like them. Do I think they're overpriced at 130? Maybe not. I prefer them to drop back a little bit, but again, a great company, good growth. PE is not crazy at 28. So let's look at profitability. It could be a little bit better. Their return on equity is negative, probably related to retained earnings or something going on with retained earnings. They do have good cash flow. So the profitability is a C plus. So it's a little lower than I typically like. Growth, very good growth, almost like Uber. Revenue growth almost 23 or a little bit over the 23%. EBITDA growth or income growth is even better. Here they're showing 61%. Valuation a C, so they're not necessarily way overpriced now. I wouldn't be surprised if they fall back a little bit. They don't pay dividends, earnings, 813 and then 11.6. So we can look at the earnings estimate. So 458 for 26, 588, which is almost a 28% increase, or 29 for 2027, 588, so just shy of $6. And in 2028, it goes up to 727. So they're increasing quite a bit. Let's look at financials. Are they buying back shares? I'd be surprised if they're buying back shares. But let's go see. Let's go down to supplementals. 155.8 for the last 2 years, and then they increased it from 153.8. So it looks like they're not issuing more shares or as many as they used to. So, which is a good thing. Usually, what happens is a lot of these companies will start buying back some of the shares. They may use them for employee retention. They might provide them as stock options or something along those lines. So pretty much everything looks good. Profitability, I'd prefer it to be better. Growth is a little bit better. Momentum is definitely better than some of the other companies. And they do, again, have pretty good options volume and premium. Now, if we look at the trade I actually made, we come over here and I did an 80-70. So it was originally expiring on 10/17, and I closed it almost a month early for 37.40. So I did spend a little bit more to close it. The position was over 80% profitable, so it definitely has increased in value quite a bit. The final return on the trade was 220%. I had rolled this position back in September 3rd. It was only open for 2 weeks. The original trade was back on 8/18/25 and it also had brought in 202, around $200. So I'll look at making more trades with them. But again, I'll probably wait for them to come back down. But let's just kind of look at what it looks like currently. So here's Coherent Corp is another vertical put credit spread. And if you don't know already, it's my favorite type of trade to make. Currently at 129, so I might look at like 115. Let's see what that looks like. That's a very low delta. Of course, that's 1031. So let's try 1121 and see what it looks like. That's a 23 delta, so we'll go a little lower. That's a 17 delta and still some pretty significant premium. So I might go a little lower. I might look to see what does a 105 look like. And it's right at a 15 delta, and that's quite a bit lower. So I could also look at a 95. Yeah, so it's got a pretty big difference between the bid, mid, and ask. So in this case, I probably might not go all the way up to the 320, but again, I'm right in that area, 15 delta, almost 30 or $25 away from the current price of the stock. And this is a $10 spread. It looks like these are probably $5, so I could try 100. And the number didn't change. So it could be the data's a little bit messed up with it being on the weekend. Let's see what 104 looks like. So that goes all negative. So if we go to 100, and we could even go out to December 19th and see what it looks like. So 105, 100, what does this look like? This is again a 15 delta. If we go to 95, yeah, so the numbers are a little bit messed up currently. In some cases, this will happen. So let's go back to 1121. I think we can use those numbers a little bit better. Or we could even try like well, let's stick to the monthly, mainly because I like monthlies because there's usually so much more data out there. So 105.95, this looks more accurate. It's still a huge difference between the bid, mid, and ask. But again, I would do, I would go to 130 or 170, then I'd go up to probably pretty close to 3, or I might just enter it here. And then in this case, I might do 2 contracts. Now, my guess is it wouldn't be this high. This would be probably closer to 100, 150. It's like I said, we're getting some weird numbers here. So probably, yeah, closer to 170 is what the trade would look like. But we can also look at volume. I mean, okay, volume, 30, volume of 30. I don't know if this 2.45 is in the hundreds. It might be, but pretty good volume. And I did not have problems trading it before. So this is what I would look at. Again, it would be a vertical put credit spread. I would sell 2 contracts expiring. I might try 1121, but I could also look at 1219, 106 again, which is close to a 15 delta. And then I would do like a $10 out long put. I'd buy 2 contracts and again, expiring on the same day. So that's how it makes it a spread, by buying that long put. Now, one thing I will do from time to time is if this trade goes against me, I might look at rolling it at some point, and I might roll it into a cash secured put. Maybe less so with this compared to some of the others, but if I did that, when I've done that in the past, like I did it with Dell and ADP, I'm able to lower the short strike quite a bit on that cash secured put. I believe I brought Dell down by like $15 or $20, as well as AMD. I did that with AMD at one time. So this is what I wanted to share with you guys. These are the kind of trades I really like. A lot of times I close them fairly early. Like I've said before, DocuSign I closed way early. Uber, I think I only had it open for 17 days. Same thing with this Coherent Corp. It was only open a fraction of the time that I originally thought. So even though I go a little farther out, I typically will close several weeks to a month early. So, and that seems to be my spot, what really works well for me. So let me know what works for you. Are you doing something similar, or you're doing something a bit different? Let me know, add a comment or leave a comment. I try to answer all the comments within 24 to 48 hours. So again, for everyone watching, I really appreciate you taking the time to watch, and I hope you have a wonderful rest of your day.